Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify and operate with integrity and transparency. In this video, we are dissecting Jack Mallers' analysis on why the US deficit is unsustainable, why the rich are getting richer, while over 50% of Americans are sinking deeper into poverty. And he sums up the reasons why the financial system is headed to collapse. And there is no free lunch. As he says, someone has to pay the bill. So stay tuned. All right, you guys have seen me mention Jack Mallers before. He's the CEO of C.H.A.N.G.E, Bitcoin Maxi, and he does a good job of breaking things down in simple terms. So playing this clip from him on Savvy Finance, where he's talking about essentially the US, if it was a company, it would be labeled as a dead company or a zombie company. And we're going to go into that real quick.
If the United States was a company on the New York Stock Exchange traded publicly, it would be what we call a dead company because it doesn't bring in enough income to make its interest payments. I think the United States brings in about $4 trillion of tax receipts and growth of their own, and they spend over $6 trillion. So there's around a $2 trillion deficit in spending. And so that's what.
Let's examine that piece because he is, spot on. So for first and foremost, it's not a dead company to be considered as a zombie company. Zombie companies that earn just enough money to continue operating and service debt, but aren't able to pay off their debt. And typically they end up in insolvency or a bailout. Happened in the 2008 financial crisis with the banks. Now this is our government heading down the same path. But let's take a look at what the fiscal data on the treasury.gov site says. The average GDP fiscal year 2023 was 27.33 trillion, which was less than the US debt of 33.17 trillion. This resulted in a debt to GDP ratio of 1.21%. So basically, we are spending more than we make, and we are unable to even pay the debt. And at this stage now, the interest on the debt is going to be extremely difficult to pay. So here you have another one from the treasury.gov site. The US government has spent 6.29 trillion this year, and it brought in, as we mentioned, approximately 4.5 trillion last year. So far it's spent, let's go back to that, where we had 6.28. We still got 2.5 months left, and last year it made 4.5. So we'll see what it makes this year. But it didn't make money out of thin air. And Jack is going to talk about how the only way for them to get the money is they got to get it from one of two places, and someone has to pay the bill. The bill comes due.
That it needs to spend. So what the market is saying is, Janet Yellen, we don't believe that you're going to get the deficits down, that $2 trillion number, the $6 trillion number. We actually think you're going to get the rates down, the interest rates, because another way to make the payments affordable is make it cheaper to borrow the dollars, right? And then when you make it cheaper to borrow the dollars, you're obviously going to increase dollar liquidity. You're going to make assets get higher, like the get long, get paid. Bitcoin's going to go up, gold's going to go up, real estate's going to go up, stock market's going to go up. And that's actually going to increase their $4 trillion that they're collecting on us. Because the biggest tax receipt that the United States collects is actually on capital gains. So as our assets go higher and we sell these assets to live our lives, obviously the US is making more taxes on us when our houses and our Bitcoins and everything goes up. So
piggybacking off of that, this is the article that he had. The U.S. fiscal 2024 deficit nears 1.9 trillion with a month to go, technically 2 months ago. And what he was mentioning about the asset prices and stuff and who owns that, 67% of the total wealth in the U.S. and the United States was owned by the top 10% of earners. That was as of the first quarter of 2024. And it's only going to continue to get that way because that is part of the agenda, is that the rich get richer and the poor get poorer. So you end up not owning anything. As the World Economic Forum said, you'll own nothing and be happy by 2030. But when you look at what he was stating about asset prices, yeah, the asset prices continue to go up because they're denominated in Bitcoin, such as a house. I'm sorry, they're denominated in US dollars. But when you evaluate them in Bitcoin, they go down. Even when they're denominated in gold, gold has gone down. So if you look here in like 2001, 2002, the cost of a house was roughly 827 ounces of gold at its peak. And this blue or purple line here is showing housing prices, right? So here's where it peaked, 827 ounces per house, and it's continued to drop off. It got to an all-time low down here in like 2010. And this was right after the financial crisis that we had. And then it's gone up a bit, but now it's come back down and maybe goes back up. So I don't know, maybe it chops sideways around here. But the point is, you can see a big gap between the US dollar value of a house and that same house in gold. Whereas before, it used to cost more gold. So gold and your Bitcoin showing that value are essentially heads against inflation or debasement of currency. So these values go up, and that value or wealth being denominated in that value is what Jack was talking about, and what this article was showing, that they own the majority of the wealth, and they'll continue to own even more as we move forward.
So that's what the market is saying. The market is saying irresponsibility. The market is losing confidence, but it's not necessarily confidence in the United States and in the US dollar. It's confidence that they can sustain government spending at this level without rates coming down. You got to take a little bit of a step back and appreciate the fact that not everyone has assets. Not everyone can get long, get paid until Bitcoin. So I pulled up in Q4 of 2021, according to Federal Reserve data. So according to the central bank itself, the top 1% of households in America, so the richest 1% in the country, held around a third of the country's wealth. The bottom 50% of the country held around 2% of the country's wealth. So the problem with this, if you have a house, gold, stocks, and Bitcoin, you know, you're right. Jerome's doing a great job. What does he want on his pizza? But over half the country doesn't have any of that. And so you are directly harming hundreds of millions of people with your strategy. Bitcoin is, very importantly, the only asset that everyone can actually acquire because it's so divisible. You can buy a penny of it. Because it's free to hold, you don't have to pay property tax on it or anything like that. You can acquire it anywhere in the world, so you don't need to be Miami beachfront real estate or on the coast of California.
Jack is absolutely right. There is a ton of people globally that don't have any assets, and Bitcoin is the first one that literally everybody can get a piece of. So as he mentioned, you know, you can start with a penny. Now, granted, you won't be able to use a penny probably to buy, and it's going to cost you more, you know, on the exchange, even transaction fees and whatnot. But like when we evaluated Satoshis, one penny is 16 Satoshis, right? So it's a start, you know, got to start somewhere. But like even $1 or something like that you could use to start accumulating Bitcoin, save $1 a day or whatever, at the end of the month you buy Bitcoin, you're able to stack sats that way. You're not able to put that $1 towards any kind of other asset anywhere else. So it definitely enables you to get a leg up, especially as this debasement or inflation continues to come into our fiat currencies. And we're going to finish up with this last clip from him that basically says someone has to pay this bill. There is a hole in the balance sheet, and it's either going to be the middle and lower poor class or the top richest elites. And technically, they probably won't pay it because of the way the system is set up.
The promising solution to the widening wealth gap in the United States.
Okay, let's take the opposite approach. Politicians are going to protect the 50% of America that only owns 2% of the wealth and doesn't have any assets, and they're going to treat those that have assets like and they're going to do unrealized capital gains. They're going to price cap things. They're going to raise minimum wage. They're going to tax the rich even more, and they're going to go after that part of America. Well, that part of America will leave. And as I went over, the US government is entirely financed by their tax receipts, primarily, not entirely, but primarily. It's a very important piece. Those that are actually producing growth and producing wealth and producing value and own the assets that pay the cap gains receipts. It's an important piece of the government further financing this thing. So if you treat those people too poorly, they won't pay you. They won't pay your property tax in California. They won't pay income tax. Zuckerberg and these guys won't build their companies here. They won't pay you the capital gains tax. And so the point is, somebody has to lose. And the point is, who's going to tell the public the truth? Because the point is, there is a hole in the balance sheet.
So that is a great point. And we've seen that before with businesses and stuff. And that is exactly what they would do. Like if you are a billionaire and all of a sudden, or you have, your CEO, like you said, Zuckerberg, Elon Musk, any of these people, if it just becomes too expensive to build or sustain in the US, they will pack up their shit and go somewhere else. And countries that have more favorable rules, they will happily welcome them with open arms. And I know for a fact, especially out here in Southeast Asia, man, the labor is super cheap. And there are a lot of countries that will literally grant all sorts of perks if you're willing to invest in the country or basically provide value to the country by jobs and things of that nature. So that's why there are a lot of textiles and food and all this stuff that are exported from these other countries, because it's just they throw labor at the problem and it's super cheap to do so. So I could definitely see some other countries snatching up that opportunity for sure. So yeah, somebody's got to pay the bill, and the US basically can't afford to, as he said, be too unfavorable with those rich top 10, top 1% companies and people, because especially if your wealth is in like a company or stocks, things of that nature, you don't have to stay there. You could just like pack up and go, sell or whatever the case may be, and rebuild somewhere else. And if you start hedging against currency and put it in Bitcoin, you literally don't have to pay anything. You would just be like, see ya, I'm out. And you catch those gains and not pay them because you're no longer in the US, and maybe you're living in El Salvador or something like that. So anyway, I just want to share these thoughts because he broke it down really well to me. And there, as he said, there's a hole in the balance sheet. Like this has to come to a boil, an explosion point somewhere. And no one is really addressing this in the political front. It's as if it just doesn't exist, or they can keep kind of smoothing it over. I still believe somewhere down the line, this CBDC narrative will come back, and they're trying to reset the debt with that. But we haven't heard much about that right now. Well, there was talking point with Trump saying he wouldn't allow it. So yeah, I don't know, but something's got to give. This is unsustainable. Clearly you can't keep doing this. So how are they going to fix it? All right, that's all I got. Smash that HBO special, help a brother out, like, subscribe, comment down below, and until next time, live daily and achieve your impossible. See ya. Want to pay your in real life bills with crypto? How about send crypto directly to anyone with a bank account? Spritz Finance is a decentralized solution to be your own bank and connect your crypto earnings to real world bills and payments. They do not take custody of your assets and allow support on multiple blockchains and Web3 wallets. Sign up below using my referral link and you will get $50 back when you make your first $50 bill payment with crypto. Additionally, I will be using referral bonuses to airdrop, donate, or burn based on community feedback. Sign up now.